The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very good morning and a warm welcome to Squawk Box Europe. I'm Juliana Tattlebaum with Karen Cho. These are your headlines. Criticism grows as the terms of Europe's trade deal with the U.S. sink in, with the bloc's leaders hitting out at the concessions President Donald Trump secured.
The German economy will suffer considerable damage as a result of these tariffs.
I support this trade agreement, but I do so without any enthusiasm.
President Trump says he just wants to be nice as he sets out a 15 to 20% range on global tariffs ahead of Friday's deadline. Philips improves its margin outlook, saying it expects President Trump's tariffs to hit profits less than previously expected. We'll be speaking to the CEO, Roy Jacobs, in just a few moments' time. We're still digesting the trade news, big EU-US discussions, of course, the framework agreement, but a lot of earnings rolling across the tape today. And first up, two industries that have been impacted, pharmaceuticals being one of them, and the other, of course, being tech and what we're going to see in terms of medical equipment. The name of Philips coming to mind straight up. So we'll get into the numbers this morning.
Let's get straight into AstraZeneca. The numbers just crossing the wires now. AstraZeneca reporting revenue of just over $28 billion for the first half of the year. In terms of EPS, it's come in 4.66. In terms of the dividend, they have increased their interim dividend by 3% to $1.03. In terms of the outlook for the full year, they're looking at total revenue expected to increase by a high single-digit percentage and core EPS expected to increase by a low double-digit percentage. Now, in terms of their investment plans, AstraZeneca has made a huge pledge already announced to invest $50 billion in the United States by 2030. And they reiterate today they have pledged $50 billion to continue to grow in the U.S. set for Virginia. Investors are going to be looking out for a little bit more color around timeline and specific projects when it comes to this investment. Also for AstraZeneca, the investment community increasingly believes that AstraZeneca has the strongest pipeline of any pharma company here. Now, in terms of that pledge in the U.S., Astra is saying as we enter our next phase of growth, we pledge $50 billion to continue to grow in the U.S., which includes the largest manufacturing investment in AstraZeneca's history. This landmark investment reflects not only America's importance, but also our confidence in our innovative medicines to transform global health and power AstraZeneca's ambition to deliver $80 billion in revenue by 2030. And the guidance, as I said, this has been reiterated in terms of total revenue and core EPS for the full year 2025. On a programming note, don't miss our interview with the CEO of AstraZeneca, Pascal Soriot. That's coming up at 1500 London time.
We've also got Barclays reporting its numbers today, and just throw some numbers at you in case you've been waiting, standing by for them. A second quarter pre-tax profit. This has come in higher than expected, 2.4 billion, 2.48 billion. The number 2.24 billion was anticipated by the market. So that is topping out on that number. The pre-tax profit that has crossed at 5.2 billion. And on the total income at 7.0 was what the market saw, but on the revenue line with 7.19 billion and on EPS 11.7. So the company also just going on to announce a further 1 billion share buyback and a half-year dividend of 3.0 pence per share. We'll get into the numbers a little bit more in the detail there, but that is the headlines that are crossing from the bank this morning.
Now, in our top story on the trade front, European leaders have lined up to denounce the EU's trade deal with the U.S., with French Prime Minister François Bayrou describing it as a submission. The bloc has agreed to pay a 15% tariff on most exports to the U.S., alongside large investments in American energy products and military equipment, avoiding a 30% rate, which would have come into place on August 1st. Sylvia, now that the dust has settled to some degree, Talk us through the reaction that we're getting from European leaders. When you look at the markets, it was fascinating to see that yesterday around this time, futures had surged, European markets opened higher, but by the close of trade yesterday, European markets were actually down, suggesting that people are a little bit more downbeat than they were at the beginning.
The relief dissipated throughout the equity session, and that ultimately also actually showcases the feelings across European capitals. If we take a look at what some of European leaders have said, ultimately they're happy that this deal actually is worse than what could have been, with tariffs potentially being 30% by the end of the week. But ultimately, there's no European leader that is actually happy with the outcome from the point of view that this will definitely bring economic pain. And an example of that was the comment from the German Chancellor, Friedrich Merz. He said that this deal is going to bring considerable damage to the German economy. Here's what else the German Chancellor had to say.
I am not satisfied with the result, in the sense of this is good. I'm just saying that evidently more could not be achieved in view of the starting situation we had with the United States. In plain language, this means that the German economy will suffer considerable damage as a result of these tariffs. But I am quite sure that it will not be limited to Germany and Europe alone. We will also see the consequences of this trade policy in America.
The German Chancellor there. But ultimately, we had a lot of question marks about some of the detail in this agreement. I can tell you now, and given that we were also looking at AstraZeneca results at the start of the show, that when it comes to pharmaceuticals, it's important to remind our viewers that at the moment, the United States has not yet imposed tariffs in this sector in particular. The reassurance and the agreement that the EU obtained does just suggest that if the United States decides to impose tariffs on European pharmaceuticals, that those are not going to be above 15%. And there were a lot of other question marks, so we can discuss that later in this morning. But ultimately, we're still looking at this detail and trying to figure out what it's going to mean for the European economy.
Sylvia, thank you. Let's get into the detail of one company that's been facing some of the tariff headwinds, and that is Philips. It has now, though, raised its full-year margin outlook, saying it expects a hit of 150 to 200 million euros from tariffs. That is down from the 250 to 300 million euros it had previously estimated. Sales in the second quarter came in at 4.3 billion euros. That was in line with expectations. Roy Jacobs joins us now, the CEO of Philips. Roy, thank you so much for joining us on the back of numbers. You did reshape expectations back in May around what some of the tariff hit could look like. That ultimately has been lower than expected. So just walk us through those numbers and why it is less than anticipated.
Yeah, if you look at Q2, actually we're excited to see strong order intake growth. We had 6% order intake growth on the back of 9% last year. That showcases the strong and resilient healthcare demand that's out there that our innovations can fulfill. We also saw sales increasing, especially on the back of strong personal health growth. And then we saw indeed margin expansion, a strong 130 basis points expansion based upon innovations pulling more value, as well as the productivity program that we're executing upon. Then together, the first half delivery of the year and then that strong momentum going into the second half, including the recently announced tariffs that indeed came down versus the earlier estimated impact that we had calculated, made us raise the guidance for the full year outlook on margin and cash flow, taking this into account. So overall, we have momentum. We see that we take that momentum into the second half, and that we have the clarity on tariffs now also to further mitigate what is out there, so that we can actually deliver the margin expansion and upped it by 50 basis points for the full year expectation.
Roy, there's no doubt that a lot of companies, and the more global you are, the more headwinds you're facing when it comes to the environment around geopolitics. Now, Trump's still negotiating with the Chinese. We've had, of course, progress when it comes to Europe. I know you've been involved in some of the negotiations when it comes to the Chinese. What are you hoping for here? Because this is still such a very large market for Philips.
So we see, of course, multiple markets in the world trending. So if you look to the US, that's actually still the strongest market. We had double-digit order intake growth in North America. So we see that the North American need for patient care is strong and even strengthening. So we see also the momentum going into the second half in that market. If you go to the other side of the world, China, That has been slower. We also have been more cautious in the outlook for this year on China. It's slowly recovering. We see that recovery coming through, but at the pace that we also expected, which is still step by step. And then we also see very nice pockets of growth in the rest of the world. We see Europe actually strengthening, but also we announced today a big deal in Indonesia where we actually are going to provide nationwide access to image-guided therapy, providing access to this innovative procedure to 280 million people. So that actually is a great breakthrough in terms of access to care. So we see that momentum around healthcare still being strong. There is this increase in patient demand, but of course, indeed a dynamic world that we currently operate in.
Roy, good morning. It's Juliana here. I understand on a call that you did with some other media this morning, you noted that on the U.S.-EU trade deal, you're still asking to exempt healthcare from tariffs. There's been a lot of confusion around whether healthcare pharmaceuticals are included in this 15% tariff deal between the U.S. and the EU. What's your understanding and what specifically are you calling for when it comes to these exemptions?
So in essence, what we have been calling for from day one when trade tariffs came into play in the world is that we want to keep access to care the number one priority, and therefore any barriers to that we actually ask to refrain from. That also then holds true for any tariffs that come into play. So we have been asking for exemptions from that in the US, in the EU, but also in China. So that's something that we have been pleading for. We're doing that as Philips. We're also doing that as industry. We also saw earlier that that was possible. In the current deal that has been announced, that was not part of it. So we keep having that dialogue so that we can focus on really providing the innovative solutions and keep investing behind those. As I said, the double-digit order intake growth in North America shows that's a strong market that actually needs a lot of care, a lot of new innovations, because also there, they don't have enough doctors, they don't have enough nurses, and the costs of the system are rising. So we need to come in with AI solutions to really make sure that we can do it in a productive manner. That's what we want to focus on, and therefore what we are asking for is keep the eyes on that and don't kind of dilute it with any other kind of measure that is taking us away from that, and we can focus on what we can control.
I want to get a little bit more color on what's happening in China, which has obviously been quite a soft market for you, but it sounds like in the latest quarter, you're seeing signs of improvement. What's driving the improvement in China? Do you think we've seen the trough there? And basically, how would you describe the recovery that you seem to say is underway?
Yeah, so we started the year, we said, okay, China will further strengthen this year, but it will be slow. And in essence, it has played out in the first half exactly as we projected it to be. So it is strengthening, but it's still slow. We saw the 18/6 festival, which is a big consumer festival with stronger sellout. So actually consumers start to spend a bit more. We also see the Chinese government actually introducing support to some of the consumer segments. And on the healthcare side, we are still working through the reforms that the Chinese government has been putting into place. But also we see actually the tenders going up. So we see that actually there is more momentum also coming in the Chinese market, but it's going slow, and therefore we remain cautious. And the bigger parts of the world that are really firing are the North American market, is also Europe and parts of Latin America and Asia. So that's where the bulk of the growth currently is coming from. Also in the second half, we expect those markets to continue. China will put in its weight, and therefore we reiterated the full year sales outlook for the year as we will step into a strengthening of the sales growth as well as continuation of the order intake in the second half.
Roy, I just want to lean into a comment you've made about the regionalization of supply chains from the US to China and to Europe. What does this look like in recent months and quarters, and where do you want to take that regionalization given all the headwinds we've been talking about with geopolitics?
Yeah, what we look for is, of course, how can we provide the best services to the biggest markets and the biggest populations that we need to serve. So then starting from China, we talked about we have 90% localized our manufacturing in China to serve the Chinese market. So that actually is in good shape. In the US, we also have a strong manufacturing base and also provide good services into that market, but we can strengthen it further. And that's also what we'll continue doing. But also we just announced the nationwide Indonesia deal, and we're also setting up services in Indonesia. So we're really looking targeted what supply chains need to look at. and need to look like. We have regionalized since 2022. In essence, we have a footprint which is quite well balanced between Asia, Europe, and North America. What you see now is that there's a bit more demand to focus more in the United States of America itself. We will also seek how we can fulfill that, and actually we have plans for that. So we make sure that we can provide the services where the patients and the customers are. And that's something that we have been building for the last 3 years. It also allows us currently in an agile manner to adapt. And also if you look to kind of the mitigation that we put in terms of the tariffs, and therefore we could up the guidance as well, is we are in control of the cost reductions and the productivity program that we are driving. We announced 800 million of productivity program for the year earlier this year, and we are fully on track in meeting that first half. And second half, actually, we'll continue with that. And that allows us also then to support that margin expansion trajectory moving forward into the second half.
Right. Roy, just a quick final question on AI. You gave us a morsel before, but I know you're working on a ton of innovation. What are you seeing in terms of revenue drivers from some of those AI breakthroughs?
Yeah, I think some great examples. For example, in North America, we won over 6 big hospital systems in monitoring. What they're looking for is very efficient patient monitoring systems where they actually can monitor more patients with the staff that they have that actually are under pressure, and they need to expand the care towards more facilities in and outside of the hospital. And that's actually what our AI solutions cater to. Another example is in magnetic resonance imaging. We just got the clearance from the FDA for a new AI suite of solutions where actually we can scan in 10 seconds a brain, or we can actually really triple the total scanning speed while driving accuracy up by 80%. So those are really impactful kind of solutions, AI-driven, that can help us deliver more care and better care at the same time.
Roy, fascinating examples. Thank you so much for sharing that with us. Roy Jacobs, the CEO of Philips. Great to catch up with you. Now, ahead on the show, President Trump holds court with UK Prime Minister Sir Keir Starmer, offering him some advice if he wants to win the next election. We'll tell you what he said next. Plus, another 90-day extension. US Commerce Secretary Howard Lutnick floats another tariff truce with China as trade talks kick off in Stockholm. And Boeing is set to deliver second quarter results before the bell, with tariffs and the Air India crash in focus. We'll preview the numbers with Anita Mendirata at 8:30 London time.
Welcome back to Squawk Box Europe. As far as U.S. markets are concerned, yesterday was a mixed session with the tech-heavy Nasdaq gaining about 0.3% as we head into a major week for tech earnings, with 4 out of the 7 Mag 7 reporting this week. The Dow Jones Industrial Index had lost about 14 basis points or so, and the S&P 500 ended the session essentially flat. In terms of Asian trade overnight, we have seen equities mixed as well. The Nikkei 225 down about 0.9%. The Hang Seng down 0.8%. Over in mainland China, where a lot of focus is on the U.S.-China trade talks taking place in Stockholm, that index rose about 0.2%. And over in Korea, the Kospi gained 0.6%. Howard Lutnick saying yesterday that he sees a likely 90-day extension of the U.S.-China trade truce. Of course, he is not leading the delegation. That is Scott Besson, who's in Stockholm this week. Now, on to Europe, where we had some really interesting trade yesterday. We started the session on the front foot, firmly on the front foot. But investors faded the rally over the course of the day, and we actually saw the Stoxx 600 go from being up about 1% to closing down 0.2%. The DAX closed down about 1%. And just as an example of how big these swings have been, Heineken, which yesterday delivered an earnings beat, actually ended 9% lower. So we have seen some wild single stock moves as investors digest earnings on top of the US-EU trade news. Now this morning, it looks as though investors are going to kick things off on the front foot yet again, buy into the weakness that we ultimately saw yesterday. So right now, all the major regions in Europe are poised for a stronger start.
US President Donald Trump has urged UK Prime Minister Sir Keir Starmer to cut taxes and curb immigration if he wants to beat Nigel Farage at the next election, telling him politics is pretty simple. Trump held court in a freewheeling near 90-minute press event with Starmer at his Turnberry golf course in Scotland, covering topics ranging from Gaza and Russia to green energy and online regulation. On trade, the US leader sounded an upbeat note on the UK deal and its 10% baseline rate.
You've done a fantastic job with regard to the trade deal. You know, they wanted a trade deal here for years, many years, through many different terms of different people, and you got it done. So I want to congratulate you on that, and it's a great deal for both. It brings unity. We didn't need unity, but it brings us even closer together. I think it's good for both parties.
Riddicker joins us with more. 90-minute intervention with Trump. I mean, that is hairy for any world leader at this point.
Yes, absolutely. I mean, I think you really saw that it kind of speaks to that power imbalance, the fact that he went and was willing to do this. I think what was unusual, first of all, was Keir Starmer, the Prime Minister, being both a guest and a host. That's quite unusual. And then the display, those military jets, the swathes of police coming in. You really saw that power imbalance, and it really shows that, the UK or the US, it's still so dominant when it comes to foreign policy, when it comes to defense, when it comes to the economy. And Keir Starmer was really leading into that.
The Sky News summary was that there was a lot of grin and bear at moments, which is fascinating. Of course, immigration coming up, and that is such a hot topic in this country. As Trump talks about politics being a pretty simple game, I think most people would think it's highly complex. I mean, the Tories are not having an easy ride in terms of positioning of their leader and just what part of the political spectrum they should be to tackle the immigration story as well. It's not easy for Labour being on the other side of the political spectrum trying to tackle the immigration story too.
I think you're right. There's definitely a lot of grin and bearing, as you mentioned there, from Keir Starmer. And when it comes to the immigration policy, he said that that he needs to slash immigration if he wants to beat Nigel Farage in the next election. And we know that Reform, they are really kind of soaring in the polls and comparative to the other party. So that is quite a real threat. So I think that's something that Keir Starmer would have been sort of sitting at the edge of his toes on at that moment.
It was interesting to hear Trump basically giving him advice on how to beat Nigel Farage to that point, but Keir Starmer didn't really give much away when he was, telling him what to do on taxes, what to do in migration. Keir Starmer didn't really respond very much.
And I think that's because he had an agenda going into this meeting with Trump, and that was where he knew that he was going to focus on. So he let the rest of it sort of be background noise. I think overall this meeting was a success, but some areas were more fruitful than others. I think the top of the agenda was supposed to be trade, but Trump really wasn't in a very giving mood when it came to that deal.
Was anything achieved on the trade front?
No, it wasn't. We know the UK already has that 10% levy, of course, but it was the tariffs on steel and aluminium that Keir Starmer wants to get to zero. And when Trump was asked about this, he merely said that should happen pretty soon, with no more details. I mean, that to me seems like the classic response of a politician who either doesn't know or who just doesn't want to say at the moment. So that was one of the areas. Then when it came on to trade, he was asked about exempting Scottish whisky, and he dodged that question altogether. Where there was arguably more success was those kind of incremental steps in the policies towards Russia and Ukraine and Gaza.
On the Gaza front, we were talking yesterday about how that could be a potential flashpoint here, a point of tension, given the pressure that Keir Starmer is under from his European counterparts to take more of a stand in recognizing Palestine. That's what the French have done. So how did it actually come up in the conversation? Was it the flashpoint that we were expecting?
I think Keir Starmer definitely had to tread, a fine line there. It was definitely a subject that was a bit more prickly, shall we say. But what Trump did concede is that they do need to provide food to those starving in Gaza, and he insisted that his team would be building food centers there. And he did say that Israel has a lot of responsibilities for what's happening. So we did see some shift in his tone. What we have seen when it comes to these kind of these global wars is that Trump is finding these peace talks clearly harder than he hoped.
Just to the final point around what was taken away from these conversations between the two world leaders was the warmth of the relationship. And that is not to be underrated at this point in time, because Trump feels very strongly about certain leaders, and that has some bearing on US policy to that country. So in some ways, as we sum it all up, was this another win for Starmer?
I think it was overall a win. Like we said, some areas more fruitful than others, but they do have a good relationship. And I think the question was, were they going to be able to build on that? And I think they were able to make some headway in that regard in this meeting.
I've got to say, in terms of relationships, not easy to build one on the back of a golf course, because if you're playing a round of golf, it can go anyway, and you feel either upbeat or downbeat when you step off that golf course, I've got to say.
That's not Keir Starmer's expertise.
No, exactly.
I don't think so.
Managing that type of emotion.